Hey, what's up, everybody? This is the first of a series of Mortgage Coach demos for individual loan officers who are considering joining the team. And I'm going to do it with top producers, people that are Mortgage Coach Grandmasters. They're people that are incredibly successful. Most of them, if not all of them, will have done over $100 million in volume and do it consistently. I've got Jeremy Forcier here. I think most people in this community know Jeremy, but because there's a lot of people that are watching this that are new, Jeremy's been a $250 million producer. And Jeremy, how are you doing in terms of production in the market right now?
Not 250 million. So no, but yeah, that was my best year ever. I appreciate the accolade. But yeah, last year was just a hair under 140 million in personal production, as well as, managing 17 different loan officers in my branch and multiple other branches with their own loan officers as well. So last year was rough, but it was still successful. I mean, all things considered. And I will tell you, Dave, is that we're off to a bang this year. So I think that things have really turned a corner. Mortgage Coach has been a huge part of that and being able to adapt, get people off the fence, see the value, et cetera. And we've gotten, 7 contracts in the last 4 days. So things are really picking up.
Cool. Well, I'm going to walk through, Jeremy, just like 5-ish minutes of the problems we solve, some of the most common ways of using Mortgage Coach. And then I'd love to have you share your desktop. Sure. and show how you use it, and maybe start with like a customer experience, and then show, okay, this is how I created it, and then I'll guide you while we do it. Let's try to knock this out in less than 30 minutes. You cool with that?
No problem at all. Yes, sir.
All right. So while we have an individual licensed version of Mortgage Coach, I mean, we are an enterprise sales organization. So I'm going to walk you through a similar process that when we meet with a head of production or a leadership team, we always start with like, what are your problems? This is what we heard you say. And when it comes to individual loan officers right now, I hear things like lead conversion is down. The more rates go up, the harder it is. That's a common challenge in the market. It's hard to get first-time home buyers off the fence and into escrow. We hear that all the time. In fact, a lot of mortgage coaches will be able to do that a lot better than typical loan officers. And here's one. It's going to be hard for many years to get move-up buyers who have a 2% and 3% interest rate into moving up. And then, guys, it's hard to help realtors get buyers to go from pre-approval to under contract and to stay under contract and close. Like, these are problems in the market. Jeremy, any other problems that you can think of that Mortgage Coach solves, or anything you want to comment on the problems we solve before we get into it?
Yeah, I mean, a lot of the problems that Mortgage Coach solves for me are bullet points, I think, underneath these 4. If I was to add any one additional problem that it solves, it's an easy way to leverage yourself, meaning that it's a link that gets sent out, a presentation, leveraging that with other referral partners on it that referred you, showing one-to-many videos using Mortgage Coach of different scenarios. So it can also be an incredible education tool, but a marketing tool as well.
So another problem is I don't have enough time in the day. And guys, I've heard loan officers that close 3 loans a month say that. I've heard loan officers close 30 loans a month say that. No one ever has enough time in the day, and we help you scale. So solutions, I mean, it's all about turning your advice and borrower education into competitive advantage that will help you get more realtor referrals, help you create clarity and confidence with home buyers, and help you win with rate shoppers. Anything else you would add from a solution standpoint, Jeremy?
No, I think that's a great place to start. It's a lot of info.
Okay, cool. So guys, this is what Mortgage Coach is not. So if you're here and you're not a Mortgage Coach, there's a really good chance that you're delivering, here's your rate, here's your payment. It's a PDF, it's in an email. Maybe you have some homemade Excel spreadsheet that's not compliant or confusing. It's not integrated. It doesn't have templates. And guys, this is what Mortgage Coach is. As Jeremy said, it's a digital link. It has alerts. You can highlight. Jeremy, that's one thing I'd love to do, is almost demo like how you send a link to someone and highlight it. You know, it's got your brand on it. It's got graphs and charts. So the next however long, 25-ish minutes, are really to show you how to go from, if you're quoting rates with the fee worksheet, that was an innovation in 1989. So literally it's like it's 1999. And we're going to show you how to go from, you know, being a mortgage advisor. So
Love it.
Jeremy, if you don't mind, show some of your, you know, this is real world loan officer, guys. He's going to show you a total cost analysis. He's going to walk you through it. Think of it as a demo of what you're giving to a consumer. And he's going to show you how to do it. And then Jeremy, keep in mind, I guarantee like we could use this with some of, you know, you're trying to grow Mortgage Coach across country. We can use this to
Absolutely.
actually help them. Like,
Yeah.
they ever call you and say, hey, what's this Mortgage Coach thing? Like, here's a video. This is what it is.
So funny you say that. It happened to me just like a few minutes ago. So yeah, absolutely. So I'm going to share my screen, and Dave, what I'd like to start with is start with an end product and go through a few different scenarios and then transition to, okay, how did you create it? Is that cool?
Cool. Let's go.
All right. Awesome.
And,
So
and anybody who's watching this live in our group, just, you know, ask questions and we'll try to get to them at the end.
awesome. And let me just blow up this screen just a little bit. All right, so first and foremost, I'm going to start with some items that I've already created. Now, the 5 I'm going to share with you, if you can see, they all happened when, Dave? Today. So I've created these 5 today for 4 live transactions and then 1 scenario, which is a rent versus own. Okay, so I'm going to start with a rent versus own here. Okay, so on a rent versus own, I love using this as an educational piece for people to show them what exactly is their payments going to be after taking into consideration tax deductibility, as well as a principal paid down. Now, in many parts of the US, rent is going to be cheaper oftentimes, right, than someone purchasing a home. That's a fact, and that's okay as long as you know that fact. But going into it, and I already know that, the conversation with this particular borrower, to give you context, is, hey, we're trying to target like a $4,500 payment or less. So even though they're paying $3,083 a month right now in rent, they were already targeting a $4,500 a month payment. So having those conversations up front are important so that when you deliver the information, it's more impactful. So in this rent versus own, what this shows right here is a total rent payment for these individuals. And if you notice how I just highlighted it, this is what I do when I go over these numbers with the client live, meaning I'm either on the phone with them. Typically it's in a Zoom meeting and we're sharing screen. But even if we weren't in a Zoom meeting and they were on their computer talking to me on the phone, this all happens in real time. You highlight something, they see it on their side. So it's a very easy way to walk people through items. So you can see here that their payment's $3,083 a month. Now, when you look at this first column, what I showed here was a 6.45% 30-year fix based on a 700 credit score. What their down payment is: purchase price $750, down payment $37,500, loan amount $712, interest rate 6.45, and their total monthly payments with mortgage insurance, property taxes, et cetera, at right around $5,700. Now, down below, this is what starts to get powerful, is that you're showing them that this is how much principal that you're paying down on a monthly basis, right? Forced savings, equity increase without the house even going up of $650 a month, versus right now your rent is getting you nothing. Below that is the net monthly payment of $5,050.21. So when you look at this, you go, oh, this doesn't make any sense. But there's tax deductibility as well, which I showed in my other one. I don't know why it's not showing up here. So let's go back and just fix it. I'll show you how quick it is. I made 2 and I picked the wrong one, Dave. I apologize.
Okay, guys. And one of the things we're seeing here, guys, is how easy it is to navigate the program, figure out, different strategies. He's opening up a different TCAs. I've interviewed Jeremy a lot of times. If you want to listen to more interviews from Jeremy, just do a search by his name in our group. And I've even done some how Jeremy uses Mortgage Coach videos.
Yep.
But
So
it's
for
nice
some
to
reason,
see
we'll put this back in. I already know that they are in a 32% tax bracket because I looked it up before. Just so you know, if you're like, how do you know that? You just click on this button here, just so you know, so that you can put in the appropriate tax bracket. It literally will take you right to where you can look it up to know what percentage of tax bracket versus income you would put in. Okay. So now that that's in there, this should be updated. We'll show you how fast this stuff updates. Bam, there we go. So they have a tax benefit, right, based on their tax bracket that I put in here, of $14.46 and 29 cents per month as well. So then now this shows them, if you take these two things into consideration, it's really the same as having a net payment of $36.03 versus what they're paying right now of $3,083 a month in rent. Now, Dave, in this particular scenario, I went on to show them that this is if you can't get any type of seller concession for any type of buy down. This is your worst case scenario of what you're looking at, and it's still pretty good. In the second column, what I showed them is that if you can receive a $16,581 credit from the seller, that you are looking at a 2-1 buy down. And I explained this to them over the phone that for the first year, you're going to be paying 4.45%, where the total payment is $48.09, but after tax benefit and principal paid down, it's actually like paying $27.96. So this was very attractive to them, right? When they were looking at it, extremely attractive to them. And then the third column, fourth column, of course, I put, this is what it's going to transition to in year number 2 if you don't refinance before the year is over. It goes up to 5.45%. Your payment would be $52.49, and then your total payment is as follows. So this is a really, really easy way, you guys, to show people conversation before is important, once again, meaning that you are actually going through what the target payment is, etc. And if it works for them in a target payment, showing them the benefits is just extra value. It's just added value to show what benefits are of home ownership. So that's one example of a rent versus own. Now, in
Jeremy,
yeah.
Before you show another one, I want to show something, guys, because here was a interview that I did of a first-year loan officer. I interviewed Ryan a couple months ago. It was his 10th month in the business, brand new LO, started last year. And he did $1 million the month before. I mean, there's a lot of experienced loan officers.
That's amazing.
Doing $1 million a year. Solid production for a first-year LO. This was a first-time home buyer who, because rates had gone up so much, was like, I'm going to wait till next year. And they were looking for like a 2-bedroom house. And I think they were working with like an old school loan officer, fee worksheet loan officer. They're like on hold, and the realtor referred it to him. And look what new school loan officer did. First of all, he uses MortgageCoach. It's part of his secret to success. If you listen to the interview, you'll hear it. And then 2, he's savvy. He's like, hey, you could qualify for a 3-bedroom house. And how about you could house hack and rent out 2 of the bedrooms for $625? And hey, what if you took that $625 and you invested it? So he's showing like a strategy to go from renting to house hacking, and now this buyer's closed on escrow. So this in the bottom corner of these TCAs, you can show the net worth over time. And guys, there's a lot of people out there, especially first-time home buyers, that aren't thinking about duplexes, triplexes, house hacking. You could Airbnb a bedroom or the house behind, and you could use MortgageCoach to show that. So just wanted to show that real quick, Jeremy, before we went to another strategy.
Absolutely. So even within that strategy, Dave, you're correct. For example, in these different boxes, I'll always go down and say, like, let's look at the rent versus principal paid in 15 years. And let's just click more info and see what the total equity increase is, right? So you can show all kinds of really cool stuff in here. Very, very easy to use and simple.
Hey, Jeremy, real quick, before we go off that one, go back into the advice engine and go into that scenario. I want to have you make an adjustment. So stay in that TCA, but go behind the scenes, go to an analyst, go to the bottom where it says long-term chart and click on net worth.
Right here, right?
Yeah, yep, net worth, boom. Go to the next, boom. Now look at that, guys. By the way, it's already changed with the consumer, but now you're showing that consumer what the
Watch.
net worth is.
There you go.
Boom. Look at that,
Yep.
guys. Like
Huge.
that's massive.
Yeah.
And in this market, we need to go from selling rates to selling watch your net worth grow.
Yep.
Look at your point. Look at how much faster you can achieve financial freedom. So important little nuance there.
That's great. Great point, Dave. Yeah, and you saw how fast it updated. It shows that in 15 years in this scenario, if they continue to rent, they'll be at, basically negative 65,000 in equity versus 320,000, right? Huge swing.
One more little nuance. Like, let's go back and change that to 7 years. Because you know what? A lot of millennials aren't thinking, 15 years. They're thinking, hey, what does this mean to me in 7 years? Like that matters more to me. Within seconds, no PDF, no email back and forth, like real time. We're still talking about north of $100,000 in net worth increase, owning versus renting. So, anyways, important
100%.
conversation and important demo feature.
Yes. Second thing is, so this is the same client, and this is the video I sent them before I did the rent versus own. So there's a video that's always included in all of my TCAs that I send to my clients that is walking them through everything line by line and making it unbelievably clear. So one that I'm using a lot right now, right, is this buy down strategy. So this is the same presentation, but not in a rent versus own format. So this is just showing them, here's if you purchase right now at a 6.45% rate, right, what the payment is, total cash to close. If we can get the buy down, walking them through that interest rate the first year, payment, $891 less per month, as you can see, then 6.45. And then their tax benefits here as well, but I'm not really focusing on that when I do the TCAs. And then in the third column is just what is the buy down change to if they don't refinance in the first year? Because this is a conversation we're all having. Everyone's saying, hey, interest rates are going to drop. Interest rates are going to drop. You're going to refinance this in the second half of this year at some point. But I love to show that, hey, even if it doesn't happen, if something completely changes, here's the worst case scenario in your second year is 52.49. And then, of course, if nothing happens, which we all think it will, including me, it just goes back to the first column, and that's what your payments are going to be over time. So I think a buy down, understanding how to do a buy down is very, very important in this marketplace. And it's really important to present this information because, Dave, I will tell you is that without this visual, it's really difficult to explain to a consumer, especially a first-time buyer, on how exactly is this 2-1 buy down going to work. I don't really get it, but being able to show them and walk them through it makes the understanding level go up tenfold.
Love it. So let's go into the advice engine now. I do want to come back and show a few more strategies that are relevant in the market today, but I think people are like, okay, cool. Like how fast can I create this? Remember, folks, you're probably getting this demo. You're an individual LO. You're not with a company who has an enterprise partnership with us, which, by the way, you should let management know that they should have an enterprise partnership with us. But you will not have integrations. The only two integrations we have for non-enterprise are HomeBot, which is super slick, and Jungo. So we do have a really slick integration with Jungo without an enterprise commitment. But Optimal Blue, Encompass, Simple Nexus, literally every single CRM, top tier CRM we have integrations with. So show us how you used it before you had an integration, Jeremy, and then just give us a sneak peek of how cool integrations can be so that we fire people out.
You got it.
Management.
So before integration, I had to go in and price out the loans first, right? Which I will do here. And I had to write down what my pricing is. And then I would go, and it's still fast, by the way. So it's still fast, but the integration's crazy. But let's focus on non-integration, right? So in this scenario, I'm just going to keep it simple and put 500,000, or excuse me, 750 loan amount. And we'll just do $1,250,000 purchase price. doesn't really matter. I'm going to say that, they have a 780 FICO score. Their DTI is awesome. They have great reserves. It's a perfect borrower that we all wish we had, right? And then I'm just going to pick any county. I just make sure, okay, wait, is this going to be a jumbo in that county? Okay, it is. Let's see what that looks like. It's a 30-year fixed. And I would have to go through and change, a lot of these different items. It's still fast, but here I would get my pricing, right? And then I would go in and just look at, okay, what is best priced right now? And then I would look at my different pricing options. So here, I'm just going to pick a couple, right? So I am just going to pick, for example, I'm going to pick 5.875, right? And that is at a cost of 0.02. So I would write that down, 0.02. And then I'm going to pick 5.5, or excuse me, 5.625 is 0.770. And I am going to pick 5.5 1/4. Okay, just for fun. 5 1/4, 2.3. So now that I know what my pricing is, then I would go into my mortgage coach and I would just create a client. So I hit new client and I would type in Dave, and then I would type in Savage. This is not for Dave, just so you guys know. And I would come down here and just write down 2023 sample purchase, right? And now under goals, I would just click this person wants to purchase a new home. And then
time him. I'm timing him, and it's going pretty good.
And then I would just go to product and I would write 1.25 mil, 5.875%. Now from here, I said enter the purchase price. Ooh, too many zeros. And here I would put in the loan amount, interest rate, term 360. And then you would just go to the next tab, closing cost. I know what my fees are, $16.95 for underwriting and processing. Now you could use templates, but I'm showing you the way I used to do it. Okay. This person
templates will save a lot of time. And you do have those as an individual non-enterprise client. We still provide you with, fee templates, strategy templates.
Yeah, like I could put in a template, but I'm not going to, okay? Because this is how I used to do it. Now, non-APR cost, I would just lump in title, escrow, appraisal, etc. You can use things like ortc.com. I haven't done this in so long because at the enterprise, Dave, it's kind of funny. And
everybody has a different way that they do it. And
yeah, so literally I would just go in and put 1250. And I would pick, doesn't matter. And hit submit, and I get all my title and escrow fees, right? So this is how I would do it. I would just go, okay, so it's about 2,000, it's about 2,400, and 3,000 is 5,400, and another grand is 6,400 plus an $800 appraisal. It's going to be about 7,250, and that is pretty accurate for guessing, just so you know. Right? So 7,250 I'd put in non-APR, and I go to next. If they want impounds, this is where you would put it in. This person doesn't, so I'm not going to. Now it becomes unbelievably easy because I'm just literally copying the last one that I made. And this one is going to be 5.625%. And I would copy it from this guy. And I would just type in 5.625. And I would change what the points are, which would be 0.770. Now that one's done. We go to next. I'm going to do the same thing. I would copy again, 1.25, 5.25%. Copy from the product that we just created. All you're doing is changing the rate and the points, 5.25. And this one costs 2.390. I am effectively done. So I can skip all this and go to presentation, choose which ones you want. I want all three, hit preview, and it's completely done. from start to finish. And that's with me pricing out the loan, with me getting the title fees, et cetera. And then here it is all done. And I usually just highlight the purchase price, loan amount, interest rate, payment, and total cash to close. That's the old way I used to do it.
So it's 3 minutes and 14 seconds. And I did start after he, went through Optimal Blue, but guys, under 5 minutes, you have options, you have strategies. It's no different with a rent versus own. If you actually created a strategy template, you could have done what he did just now in 1 minute. So you can still move really fast without integrations and get started with Mortgage Coach literally tomorrow. I mean, it's $150 a month with no commitment. I'll cover a little bit more about that at the end of this demo. Jeremy, show us really quick how you would, you don't have to go through the whole thing, but with integrations, because guys, we integrate with Optimal Blue, we integrate with, most LOSs,
Yeah.
pricing engines, CRMs, just make folks jealous.
So, if I
their manager to have an enterprise partnership with us.
So if you notice there's this little Mortgage Coach button in Optimal Blue. So if I wanted to just create one, not from Encompass and directly from Optimal Blue, I would just click on the rates that I want to show. So let's do the same ones, 5.25, 5.625, and 5.875 was the other one I did. So I literally just click those, and then I click this fancy little button called Mortgage Coach, and magic happens where it will literally create, right? And I can rename them all right here if I wanted to. So I could put, 5.875, 5.625, and 5.25. And then I hit launch Mortgage Coach, and shazam, bam, thank you, ma'am, it is created. So it literally is done, you guys. I could record a video straight from here if I wanted to. All the information is in here, and it is absolutely unbelievable. So this shows you how fast you can do it with integration, even though you can still do it in 5 minutes or less without an integration.
All right, let's go back into the actual advice engine. I want to call out, go back to where you were just now.
Oh, sorry.
Back to that screen. I want to show them, there's 2 buttons in the upper right-hand corner, guys. One in the upper right-hand corner, you can create a video. Don't click on it. The other one is to go into the live feature. So if you want to highlight it while you're walking the client through it, super easy, super fast. If you could click on the video feature real quick, Jeremy, what do you usually do here? Don't click on this next button. Do you usually click on the mobile app or the web app or the audio?
Yep. So I 9 out of 10 times use in the web browser. Okay. And now listen, I will tell you, it looks and sounds better in the mobile app, at least for me. But the reason why I love doing it in the web browser is because I have all the information in front of me, and I'm just reading it as the as the screen is capturing it. So ease of use, web browser, look and sound, mobile app.
Okay, cool. Appreciate that, brother. Anything else you want to show inside of the app before we go show them another strategy?
No, I think that's great. We should show them another strategy.
Okay, let's show another customer strategy, because here's the deal, guys. 63% of all mortgages in America start with a 2 or 3. They're under 4%. So one, you got to kill it with first-time home buyers, and we just showed you a great way to create urgency and value with first-time home buyers. And 2, you got to kill it with move-up home buyers. And in this market where rates are high and they're expected to go low, you need to get everybody to understand that, whether you want to say date the rate, marry the house, you need to help people understand that it's a buyer's market. And
Yep.
when rates come down, it's going to be a seller's market. So this is a strategy with Mortgage Coach, whether you have an integration or not, that every loan officer should be rocking out in today's market.
Yeah, so this is in this particular scenario, so a live deal that went into contract last night that I created today. And this is for a non-owner occupied property. So you're going to see more non-owner occupieds and first-time home buyers because of what Dave just said, with the move-up buyer pool being extremely small, being super secure in their house, et cetera. But guess what? Investors they see that this is a good opportunity for them as well. So in this scenario, this is a non-owner occupied 25% down. And what I'm showing this individual is that at 25% down with 6.25%, he wanted to see 30% down and 25% down. I'm catching all my mistakes. I did label this wrong, but it is 30% down. So, and I already sent him the video, so it doesn't matter.
But
Pro
by the way,
tip.
you can update that right now in the TCA. So when he logs in,
Yeah.
so let's finish explaining it and then we'll fix it.
Pro tip is don't worry about messing these up sometimes if your data is correct. Okay. So what I did is walk through and showed 25% down first, what the payment is, including taxes, insurance, HOA, everything, so they can have a good understanding of what their cash flow will or will not be, and what the total cash to close is for this scenario. In the second column, I showed 30% down, which is not titled correctly. And I'm showing that, hey, the payment just drops $160 a month compared to 25% down, so you're essentially coming out of pocket with $24,000 more to save $160 a month. When I advise this client in the video right here that I could play, but I won't, I say, hey, I want to focus on column 3 now and why I think 25% down makes more sense, right? Future free refi. And the context is free refi means if anyone refinances with me in the next 24 months that I finance right now, we are waiving processing, underwriting, and appraisal fee. Okay, so that's the context for you. So there's no lender fees at all unless they decide to buy down the rate, et cetera. And I talk about the Fannie Mae article that came out, which I do send to people, that says that interest rates are targeted to hit right around 4.5% in the latter half of the year in 2023. So why would you use 5.25% then, Jeremy? Well, the reason why I'm using 5.25% here on a future refinance is because non-owner occupied rates are typically 0.5 to 0.75% higher. And I explained that in the video. So I'm showing them that 5.25%, when we refinance you for free in the future, your payment is going to drop to $28.64.72. That is less than you putting 30% down right now. So why don't we save that cash in your pocket and use this option here? So this is a really simple example for you to show different options now, as well as future casting as to what rates are going to look like in the future, with a little hook here of free, future free refi, and making sure that you're explaining that correctly.
Love it. All right. So Jeremy, you still there?
Oh yeah, I'm here, buddy. I got a bunch of other ones if you want me to go through them, or we can do whatever you'd like.
So yeah, stop sharing. So guys, here's the deal. Mortgage Coach it's gone from a competitive advantage to it really is essential in a market like this one. I mean, this is an educational market. You need to be able to show the strategies Jeremy's showing you. We could spend a lot of time going through this, but I think we've shown enough information. Like, get on the team. Yeah, we have open house flyers, so you can create co-branded mortgage experiences. You can create strategies for realtors. Like, you see a realtor that's having a hard time selling a home, and one of the things I recommend is that when you get that listing alert, powered by Sales Boomerang, that you should create a total cost analysis. We're actually working on it, so we'll automatically create a TCA that's for the realtor. So you go to that realtor, hey, you just listed your home. Let me show you some strategies on how you can better sell that home. We're also going to automatically create a total cost analysis that you can go to that seller of that home and say, hey, you're probably buying a home. Look at some affordability strategies on that next home. So guys, in this market, we need to create opportunities. When we hear about a kid graduating from high school, we should be going to that family and saying, hey, do you ever think about helping your kid house hack? Could pay for your kid's education, or buy a duplex or a triplex. When you get a life alert through Sales Boomerang, or however you get life alerts, if you are on Facebook and you hear about someone graduating, you should be going to that family and going, hey, you ever thought about helping your kid buy a duplex, triplex, or house hacking? And using Mortgage Coach to do that. So there's a lot of different ways, different things that you can do this. It's $150 a month, but I always say, guys, if you're not using Mortgage Coach, you're paying at least one loan a month for Mortgage Coach. You might be paying multiple loans month if you are not giving your family a total cost analysis.
Yep.
Jeremy, what do you think I'm overselling with
No, I think you're underselling. I want to give you guys a fact, okay? Because I do love data. And so one of the number one things that you came up with, Dave, was lead conversion is down, right? Because of higher rates. Facts right here. My leads are down. Okay, my leads are down 58%. If you look at it from like a year over year, month over month type basis, they're down 58%. My conversion is literally 64% right now. So my usual conversion is not nearly that high. It's like 31%. I'm talking about lead to pre-approved to funded, right? So that is gigantic, huge swing in my conversion. And the only thing that I do differently every single time than my loan officers, my competitors, shame on you, my loan officers, if you're watching this, is I actually use this every single time. It makes conversion easier, not harder. So if your leads are down, you need your conversion to go up. This is the easiest tool to convert more people because of the interactiveness of the product.
And how does your conversion compare to most of your loan officers? You know,
it's light years higher. I mean, 52% higher than theirs is.
And then another key metric that you've measured many a times is price exceptions.
Yeah.
How do you compare to your peers or to other loan officers from a price exception standpoint?
Yeah, so when I did this original case study with you, I was only giving away on average 7 basis points with the same pricing as what I was comparing it to within my peer group, where their average was 45 basis points on average. So huge discrepancy there. I mean, gigantic. So I'm hundreds of percent lower if you just compare the basis points to basis points as they are. And once again, that goes back to converting a lead with real data that they can look, see, touch, feel, and comparing it to the rate sheet and costs that are provided by you, rather than them having to go out and shop a bunch of other places. You can give it all to them in one presentation.
I love it, brother. So first of all, thank you for taking time to give back. For anyone watching this, hopefully we made a really good case that, you know, go to Savage Insights at the very bottom. It's sign up for Mortgage Coach. That is the absolute most valuable way I can serve every loan officer, is to be a user and be a member of our platform. I always keep it at the bottom though, because I want to just create value for you guys. You know, I always put whatever the number one piece of content that I've created is always at the top. I move that around from week to week. I always have subscribe to our YouTube channel, where, guys, not only do you get an amazing piece of technology, you're getting free training. You know, like, you're getting free sales training on how top producers are doing it. We've got an incredible Facebook group. If you sign up for my text group, you'll get what I think is the best content from week to week. You guys just went through a demo, so don't sign up for another demo. You're just going to get what you got today. Hopefully you got value. Again, when it comes to individual users, we don't have salespeople that sell to them. So we don't have someone that can take your calls. It is a month-to-month commitment. Sign up. If you don't like it, you don't have to keep it. But you do have support. So once you sign up, you will get questions answered. You will have support people helping you learn to use the program, helping you successful with it. And then lastly, and not least, tell your manager, hey guys, we need to get this thing turned on at the top and make it easy on us. So Jeremy, bro, appreciate you.
Appreciate you. You guys go sign up now if you don't have it. Absolute game changer.
All right. Take care, everybody.